you can bet the world is listening to what Donald Trump said there about putting tariffs on countries that don't want to hold the dollar as a reserve currency. And what are they going to do? Well, I think they're already doing it. This is just like imposing sanctions. 100% tariff is just like a sanction. And we've seen in the last 2.5 years how well Russia has coped with it. Wednesday, October 16th, 2024, Monaco 64, home of alternative economics and contrarian views. Well, we're going to look at Donald Trump today. In my opinion, he's just hammered the biggest nail in the coffin of the American dollar as a major reserve currency. That's what we will focus on today. Before we do, though, just want to have a quick word about UK CPI, which is what we're told is inflation. Of course, we know that inflation is when you create currency and credit out of thin air and you debase that currency, and that currency continues to buy less and less over time. And that's what we've had ever since World War I, everywhere around the world, unfortunately. So I saw this morning that we just had the CPI data published, and the FT, of course, reports UK inflation falls more than expected to 1.7% in September. I mean, I have to say they don't even know what they're talking about, because it didn't fall. It actually rose. The CPI rose by 1.7%, right? So the headline is already really misleading. And why is it misleading? Why would the FT mislead the public about inflation? Well, because the FT is a mouthpiece of the central bankers, of the banking class. And I'm sorry to burst people's bubbles. Donald Trump is also a pawn of the bankers, and I'll tell you why in a minute when we look at the final nail that he hammered onto the US dollar. So what I wanted to show you about UK CPI, which is the Consumer Price Index, and the Consumer Price Index is a basket of goods that consumers used, and it's not really a reflection of people's cost of living costs. Because different people have different circumstances. Very wealthy people couldn't care less if prices are rising quite a bit. But the people at the bottom, the bottom 90%, they feel it, because basic necessities are a big part of their income. So what I wanted to show you is the Consumer Price Index itself. Not these monthly and annual numbers that they publish, and people like the FT manipulate the numbers. So you can have a better idea what the Consumer Price Index has done. And it looks pretty much like it's rising, and that it never drops, at least since 2014. And even since the late 80s, as you can see, there's very rarely a time when it goes down, and we've seen how it's picked up so much after 2020, 2021. And why did it do that? Well, because they shut down the economy for 240 days. They printed £500 billion of funny money. The government borrowed most of it to pay people to stay at home, not working. And yes, we've had some geopolitical troubles, but the underlying reason why the Consumer Price Index has gone up is because they shut the economy down and they printed loads of funny money or currency out of thin air. And as you can see, we've gone from below 110 to the latest that Trading Economics has here, 134.3. So what we're seeing now is that the rate of increase has come down to 1.7. But believe it or not, the Bank of England has a target that it needs to keep CPI growing, or they need to keep trashing the currency by 2% every year. So now that it's dropped below 1.7%, the whole City of London analysts, Wall Street analysts are saying, wow, the Bank of England now will be able to cut in its next two meetings, or the last two meetings of this year. They're going to be cutting rates aggressively because we can't have the pound strengthening because we need to keep the Ponzi scheme going, the debt scheme going. And who benefits from the Ponzi debt scheme? Well, it's not you. It's the government and Wall Street. And that's why we saw people like Larry Fink and David Solomon, the CEO of Goldman Sachs, at the investment conference here in London. And that's why we're seeing Howard Lutnick, who's the CEO of the biggest U.S. Treasury broker in the world. That's why he's become Donald Trump's transition team co-chair, right? The other person is a woman who's in charge of the circus, the bread and circus part. I think she's been involved in wrestling. But the important thing to know here is that Trump, he's controlled by Wall Street. And what he said yesterday at the Economic Club of Chicago, I couldn't believe it. Yes, he's been very good at building high rises, building golf courses, building his brand in real estate. But I'm not too sure about his economics and his understanding of, world monetary affairs. So let's listen to what he said here. I'll just play this clip from X, and then I'll give you my comments.
If a country tells me, sir, we like you very much, but we're going to no longer adhere to being in the reserve currency, we're not going to salute the dollar anymore, I'll say that's okay. And you're going to pay a 100% tariff on everything you sell into the United States. And we love your product. I hope you sell a lot of it into the United States, but you're going to pay 100% tariff. He will then follow it up by saying, sir, it would be an honor to stay with the reserve currency. That will be like just playing. That's not even chess, that's checkers. But you don't have listen to this, you don't have other people that can talk that way.
The first big thing that doesn't make sense that he said there is that the countries or the companies from abroad that are selling goods into the U.S., they're not going to pay anything. It's going to be you, the U.S. consumer, that's going to pay the tariff. The exporter from the country doesn't pay the tariff. That's something that Donald Trump got mixed up there. The other thing I would say, why would other countries want to salute the U.S. dollar? I don't see a reason for that. Maybe Americans might want to salute the U.S. dollar, but I personally would not even salute the U.S. dollar if I were an American. I am in the U.K., of course, and I don't salute the British pound either, because the pound and the dollar and all other fiat currencies are just trashy bankster currencies created out of thin air. Why would I want to salute that? So now you can understand why really Trump has just hammered another huge nail in the coffin of the American currency as a major reserve currency. And I think what the world is trying to get away from, and I'm not saying they're going to be successful, but they want an alternative because what the United States has been doing with the US dollar is using it as a weapon to get people to do what they want. And I think that's wrong. Each individual nation should have sovereignty, and so should the US. But the reason why I think it will fail is because of Triffin's dilemma. So let's go through what the Triffin dilemma is, and then I'll tell you why really the United States, as it is now in its currency, there's no way out really, except changing things massively. But we'll look at Triffin's dilemma first. It says Triffin's dilemma or paradox is the conflict of economic interest that arises between short-term domestic and long-term international objectives for countries whose currencies serve as global reserve currencies. This dilemma was identified in the 1960s by Belgian-American economist Robin Triffin, who noted how the country whose currency is the global reserve currency that foreign nations wish to hold as FX reserves must be willing to supply the world with an extra supply of its currency in order to fulfill world demand for these FX reserves, leading to a trade deficit. So we're going to stop right here. And I'm going to put a link to this below in the description. You can read the whole thing. But in a nutshell, what happens if the rest of the world is forced to use the dollar when they deal with other countries? Let's say France wants to do business with China. They should be able to deal in the euro or in the yuan. But what President Trump is saying, that those two countries have to deal in the dollar. Makes no sense. But that's how the world has worked mostly since the 1950s. And I say the 1950s because it was only in 1954 that the dollar surpassed the British pound or pound sterling as the major reserve currency. Yes, it was 1954. So what happens in a world that Donald Trump wants to see, where he wants to force all the other nations in the world to keep dollars and deal with dollars, even if they're not buying or selling from the United States? Well, what happens is that countries will be forced to, make the cheapest goods possible, the cheapest services possible to export to the U.S. so that they can earn dollars. And that's what creates the trade deficits, the balance of payment deficits. And that's why the U.S. has such a huge trade deficit and balance of payments deficit, because when countries are forced to use your currency, they'll try to earn in that currency. And the only way they can do that is to try to sell you loads of goods. So it will make things even worse. So what do I think the solution is? Well, the solution always goes back to gold. Yes, back to gold, because gold is apolitical. It can't be created out of thin air. It has to be earned. It's only through gold that you can settle trade balances. You can't settle trade balances with fiat currency. And why is that? You might ask, we can just pay in dollars. Well, but the dollar is a debt instrument. Yes, it's a debt instrument in the fiat currency world, and so are all other currencies. And that's why I think the BRICS nations and BRICS Plus are moving towards a system where gold is very important. I'm not saying they're going to get their own reserve currency. I think they'll have this mechanism called the unit, where gold makes a big part of the settling mechanism. And what's the solution to America gaining more respect and countries wanting to hold the American currency, even if they don't need to? Well, I think the first big thing, and no one's talking about it, well, there are a few people talking about it, but no politician is the fact that the U.S. is living beyond its means. And by that, I mean Uncle Sam. I mean, just look at the debt. It's approaching 40 trillion. It will be at 40 trillion very soon. The public debt, deficit spending is going through the roof. What else? Yeah, all the spending on the military industrial complex. But yeah, all the bailouts you had, and it's not just the US, but the UK and Western Europe, the bailing out of Wall Street that we keep seeing over and over again. It wasn't just in 08, 09, it was also in 2019, 2020 with more QE, and it's going to happen again, you can bet, especially when you have someone like Howard Lutnick being so important in terms of creating or the transition if Trump wins. It's all based on the fact that Wall Street needs the dollar to be in demand, because if the dollar is not in demand, treasuries go down in value, rates go up, and the whole everything bubble implodes, and Wall Street suffers. And I think that's happening already, and that's why I think there is no solution aside from the not just trade deficits and budget deficits. You've got all the unfunded liabilities, which are going to be huge in the next 10 years or so with the baby boomers retiring. America as well is one of the unhealthiest countries in the world. So the cost of healthcare is going to go through the roof. So this is not going to be the solution. Yeah, you can bet the world is listening to what Donald Trump said there about putting tariffs on countries that don't want to hold the dollar as a reserve currency. And what are they going to do? Well, I think they're already doing it. This is just like imposing sanctions. 100% tariff is just like a sanction. And we've seen in the last 2.5 years how well Russia has coped with it, and how well they've even flourished, and their economy has become even better. These countries are going to find alternatives. They're going to sell their wares to China and other countries, and they're going to ignore the U.S. I mean, the U.S. doesn't sell much anymore, so they might need some dollars to buy stuff from the U.S. I grant that. But that's not what Trump is talking about. He's talking about forcing people to just hold dollars, because he doesn't want the Wall Street game to end. But unfortunately, I think he won't be able to do anything about it. And I don't think it's a good way to influence people, to tell them you're going to have to salute our currency. Doesn't make sense, does it? And if you go back to prior to 1862, there were no legal tender laws in the United States. And you could use any currency you wanted, any gold coin or silver coin. People were using French coins, the Spanish dollar. That was prior to the Civil War. But that was all ended with the Legal Tender Act. And so what I'm trying to say here, the best way for America and its currency to become or regain some of its status, and I think it's not going to disappear, but it's going to become less and less important. But the best way to gain that prestige is to clean up your domestic economy, clean up your overspending, your deficit spending. Maybe think about ending the Fed. That would be good, I think. And cracking down on Wall Street, because Wall Street is out of control and they're in charge. So there you go. That's all I have to say about that. So let's quickly look at where the markets are this morning. I spoke about UK CPI. Well, not surprisingly, after those numbers, the pound is made, or the price of gold has made an all-time high in British pounds at, let's see here, 2,062. And you would think, well, if inflation has come down and is under control, how come the pound is dropping versus gold? Well, it's because gold knows that it's a lie, right? I told you CPI is still going up, the index itself. So that's what we're seeing this morning. So right now, spot gold is at 26.75. It's up about 12 bucks. The high's been 78 and the low is 58. The all-time high is at 26.84. That was a few weeks ago, 2 or 3 weeks. I don't remember exactly now. Silver is doing fairly well as well. We're at 31.72. The high's been 83. It's up about 22 cents. The low's been 40. The stock market is pretty much unchanged here, so nothing really to report. The pound is down quite a bit. It's down below 130 now, down 0.2%, because the markets expect the Bank of England now to really cut rates again. They paused for the last few months. They had one rate cut this summer, and they're definitely going to cut again, I think, soon. What about crude oil? Well, crude oil has rebounded a little bit. WTI is up 0.2% at 70.50, and so is Brent. It's up 0.5%. And just finish off with the bond market. Let's look at U.S. Treasuries, see what they're doing. Well, the 2-year note is down 2 basis points at 3.94. The 10-year is down about 2 at 4.01. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.